And now back to hopefully legal action on the home market today. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, regional markets have headed higher, but the Australian market has dipped against that trend.
Yeah, Tiki, we're certainly seeing some volatility. It's probably a real indication of uncertainty in markets in regards to what's happening on the oil price and the impact or potential impact on global growth. Today we had regional markets, Hong Kong and the Japanese market pick up a little bit, largely because Japanese machine orders were better than expected for January, coming in at 4.2%, expectations are about 3%. Now the significance of that is that it does look like companies are starting to spend a bit in Japan, so that's viewed as obviously slightly positive news. Also, we've had a second day of oil prices just being a little bit softer, so the shine coming off oil prices at this point in time. But despite what the regional markets were doing, Tiki, the Aussie market just couldn't hold up. We were basically slid right through the afternoon. Volume was reasonable, a touch under $5 billion of turnover. It did look like there might have been some portfolio selling, but it was pretty much across the board, with the banks and in particular the resources getting hit.
Well, to some company news, and Oz Minerals looks like it's buying back the quarry, so to speak, in South Australia. How significant is that gold and copper deal announced today?
Well, it's a fairly significant mine in terms of size, although the reserves are yet to be proven, but it looks like there could be anything up to 225 million tonnes of copper and gold ore.
It's quite close to Olympic Dam, isn't it?
Yeah, look, it's about 250 kilometres from Oz Minerals' existing Prominent Hill project, so it would be a similar size mine. They're paying about $250 million for it, with a $50 to $70 million kicker on first production. Now, put this in perspective, Oz Minerals has been sitting on about $1.3 billion of cash reserves. So even after paying dividends this year and next, this is a very affordable acquisition. Looks like it's good copper grades and some level of gold offtake as well. So I think the market views it reasonably positively, although Oz Minerals was probably caught up with the rest of the resource sector and was down about 3.5 cents in today's trade.
Now, elsewhere in resources, the uranium sector looks a bit hot. Extract Resources finds itself in an interesting position with its shareholder Kalahari being bid for by the Chinese.
Yeah, indeed. A state-owned Chinese group has bid for Kalahari. Now, Kalahari is listed on the UK AIM stock market. Now, the largest asset that Kalahari holds is, in fact, a 43% shareholding in Extract. Rio is also a shareholder of Extract with about just under 14%. So there's a few conditions that have to come through on this bid for it to succeed. One is that the Chinese are going to have to get FIRB approval to be able to go above a 20% stake in this Australian company, Extract, by virtue of the fact of owning that 43% stake. They're also going to have to get approval from ASIC, and it's also subject to finance. So a long way to go. What's interesting is the bid for Kalahari by the Chinese is about 11% premium. Extract has already rallied 14% over the last 2 days on the back of this news. So, we've got to watch this one fairly closely.
Martin Lakos, thanks for joining Late Line Business.
Thanks, Tiki.